we have got to talk about gold. Investors are panicking. There's blood in the streets. Gold down minus 3.4% yesterday, dropping $100 an ounce. People are freaking out. I had a trader friend text me, Daniel, gold is going to go down to $1,900 an ounce. Relax, everybody. Let's look at the fundamental facts. Let's look at the charts. Let's see what's really happening. It's very, very different than what people are thinking right now. And then let me tell you the levels that you need to know right now for the gold trade. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Everybody take a deep breath, mix yourself a drink. If you're a gold bull, it's got to be a stiff one after yesterday. And let's see and take a look at the factors, what really happened. Okay, gold down $100 an ounce. That's pretty rough. It's a nasty looking candle in the chart, no doubt about it. We'll talk about it in a second. But what are the reasons why this happened? There are really three factors that led to the sell-off, because the strong dollar is not new. We knew about that, and the gold price didn't care about it in the past days. So that's not the deciding factor. First reason, President-elect Donald Trump nominated Scott Bessent, former Wall Street guy, hedge fund guy, as Treasury Secretary. Wall Street loves this. Why? They believe he's the right guy to deal with the deficit, with debt financing in 2025. And, pay attention, Bessent believes in controlling inflation, which would be negative for the gold price. Second reason, we hear that there is the opportunity for a ceasefire in the Middle East. So the geopolitical risk premium just evaporated out of the gold price. If you watched my videos last week, you remember I told you there's a $60 to $80 risk premium, geopolitical risk premium in the gold price last week. Peace in the Middle East. Everybody believes Trump is going to broker a fast peace in the Ukraine. So therefore, the geopolitical risk premium in the gold price went out of the gold price yesterday. I said 60 to 80. It went down 100. Let's look at it. Probably 60% of the $100 that were lost was the geopolitical risk premium. 30% was the Bessent nomination, and 10% were chart technicals. Boom. We were right on the money defining the risk premium that was in the gold price that needed to go out. So what does that mean now? Let's start looking at the charts. Okay, so here's the gold chart. Nasty looking candle right now. First, let's talk about the geopolitical premium. With this $100 drop, the geopolitical risk premium is now completely out of the gold market. What does that mean? That means that now any type of escalation that happens in Ukraine, in the Middle East, China, Taiwan, whatever, is not in the market. This is really interesting because that offers upside potential for the gold price that is not in the market. Let's look at the technical levels right here. What are we seeing on the daily chart? Okay, so we see this nasty looking candle which basically wiped out 3 strong bull days in the gold price. We also saw it went down to this purple support zone that I've been telling you about for weeks, and it reversed here right now. Is this already the end of this correction? Nobody knows. Literally nobody knows. So there's an old saying for the traders, for the chart technical traders, when in doubt, zoom out. We will do this in a second, but let me finish off the daily first, okay? What we are seeing, if we look at this uptrend that started in March with a breakout to new all-time highs, we saw higher highs and higher lows. Now we're still in this structure where we're seeing higher highs, but if this is not a correction in this up wave, then for the first time we would see lower lows. Again, this here is a lower low than this, but this is all one wave. So this means that this is not, we have higher lows, we have lower highs right now, we have lower lows, but it's within the uptrend, so the overall sentiment on the daily still bullish. This sentiment will shift only if we break below this support zone here around 2,500. If we break below this, we're going to test the uptrend at around 2,400. And that is the maximum downside date I see at the moment. What is the ideal scenario for us right now? The ideal scenario for us is A, this is it, right? This is the doji, and now we're rallying up to a new high, which if we hit the upper band of the uptrend would be somewhere around here. That would be, as you can see, a new high on the close. Perfect. Then we're back in the gold bull market. What I would love to see, ideally, and what I think will happen, is that we at least will test the yellow support zone here, or the lower end of the uptrend channel. And what I want to see is that we do not go below this low from the past correction. If this happens, let's say we go down to the yellow area or the lower end of the uptrend channel, form a bottom and move up, this would actually be extremely bullish, because then we have not marked a lower low. I can also see a scenario where the institutional investors try to break the gold price below the uptrend and maybe even the support zone for a little bit to get the retail investors freaked out and to get stop losses triggered. We have a sharp sell-off. They use it to buy up all the gold that they want, and then we move back into the uptrend. Either option is on the table. Now, this is the ideal scenario. I'm not worried about this lower high because we're still in the uptrend. That's fine. What does worry me, and what I do not like, is this. In this whole uptrend here, the orange uptrend, as you can see, you see large green candles. That's very bullish. And on the other hand, look at the red candles compared to the green candles. They are small. So the selling is small, the buying is big. That's what we want to see in an uptrend. Even in the correction phases that we had here, look at this. It's fairly small red candles. Small red candles, small red candles, small red candles. Here we go as well. Here's one long one, okay. But the other ones are small. Now look at what we have seen recently. Large red candles. That is the part that I do not like. But so far, if we look at the overall structure of gold, things are still bullish. So when in doubt, zoom out. Okay, let's look at the weekly. This is the weekly 2023. Here we go. This is this year. I don't know what you guys are seeing, but I see an uptrend. I see an uptrend that's completely intact. Yeah, we had some nasty red candles in the past 3-4 weeks, right? In November, 3 red candles on the weekly, only 1 green candle. Okay, not great, but nothing unusual if we look at this big up move that has basically happened, where gold gained about $700 per ounce. Now it has given back around 150. That's not unusual. The intensity may be unusual, but the amount is not, right? So Let's look at the monthly. Same thing. Look at all these green candles that have happened since we broke out in gold. Absolutely understandable that at the upper end of this uptrend channel that we will get a big red candle. If we get another red candle in a month and it goes down to the yellow support zone or the lower end of the uptrend channel or even the support zone of 2500, you would say, yeah, that's completely normal. So the long-term time frames clearly favoring overall uptrend in gold. There's nothing that we see on the long-term time frames that indicate that we have a real trend reversal in gold. Now there's still the opportunity of this head and shoulders that I've told you before. We will see if this plays out, but overall the only thing that I do not like is that the selling volume has increased. You see it down here. You see it in these large candles. Those are the only things that I do not like, but nothing is really perfect. Again, ideally we go down to this area, but we do not mark a new low. We form a bottom here. We would have a double bottom and then we are parting again. Now let's look at the dollar real quick, because we know that a weakness in dollar, that will support the gold price, and that's exactly what's happening today, as you can see here. Look, this is the dollar chart that I've shown you for a while, and I showed you that the dollar has rallied against the euro into this massive support zone, and it even tried to break out of it. It was too much for the dollar, especially after this massive Trump pump rally, and now we are seeing the weakness that I already predicted for last week. Now it's happening. We had one final spike up. Now we will see if the dollar continues to weaken. Remember, Trump wants a weak dollar. So, and real quick, because it was requested, let's look at the digital gold, Bitcoin. I told you yesterday, I think we're at 98,000 or something like that when I shot the video, that we would correct down to this blue support zone. That's exactly where we are. People are already asking me, where would we go if we break below it? Not so fast. Let's relax. This is completely normal. It's true. When the cryptos correct, if Bitcoin goes into correction, it usually goes into a steeper correction, high volatility. The big target zone would be the two yellow lines that you see here, the former high, so basically around 75,000. I do not think that we're going to get there right now. So, gold, no reason to panic. However, there is still downside potential. We do not need to rush into buying gold right now, but we need to have our limits ready, which I've shown you in the charts. Definitely, if gold goes down to the lower end of the up channel, the uptrend channel, that's where I would add to gold. If you do not have any gold positions, that's where you want to start buying. Open up a bigger position, hold some money in the back so you can add to it if we keep going down, or if we go up and therefore it's confirmed, and then you use a short-term pullback to buy back in. We'll talk about the miners in the coming days, what is going on there. But as far as gold, this is where we're at. The world is not falling apart. The charts tell us the gold bull market is not ending. And the central banks will not stop buying gold in 2025. That's for sure. Talk to you tomorrow. Bye-bye.